right, good morning everyone. This is Czar. Happy hump day. It's about 2 minutes until the open of London session. Just getting my bearings here. It's nice and early here in the New York zone. 2 minutes to 3 a.m. Been up for about an hour, so up at around 2 o'clock this morning. Actually, a little bit before that this morning. Made myself some coffee, getting some caffeine into my system. After a very interesting night in the markets, those of you who were watching, of course, you saw what happened yesterday in New York. I'm going to pull up this chart. We're trading the NASDAQ, by the way, for those who are new. NASDAQ futures. These happen to be the micro E-minis on my screen. You could be trading any size contract, of course. Or you might be trading the Dow or the S&P or anything else for that matter. All the things we talk about today, the principles will apply to just about anything that you trade, including cryptocurrencies, certainly the bigger ones like Bitcoin, Ethereum, and so on. But today we'll be trading the NASDAQ if we trade at all. And there's a reason why I'm saying if we trade at all, and I'll show you that in a minute. But this is yesterday. In the middle of my screen, this is the Asian session, this color you see behind. This is a 10-minute chart, by the way. And then we have the London session yesterday, very much range bound, and then the explosion on the New York Open. And those of you who were here live with us saw that happen. I didn't take any trades on the Open. Now, normally with a breakout like that on the Open, I often will. I was just very much engaged in welcoming the troops. I even said this is the kind of move I would normally take right about here. Didn't take it, and there's a part of you that says, well, how did you miss that entire move? It's a couple of 100 points. And let's take a look at the extent of that from the Open all the way to the top of the day. It was 207 points. But look what happened at the end of the day. That whole entire move was completely and utterly obliterated. It was erased, and we came right back into that 70, 80 point range that we had going in. Now you'll see that the London has opened. Here, if you're watching your own charts, I'm going to get back to that in a minute, but that tight range that we had the day before, there's Monday, this is Tuesday, the explosion out and back into that range, and now we're here on Wednesday, on hump day, and we're sitting there again, right? Obviously, we had earnings announcements yesterday, Microsoft, Texas Instruments, and Google, and so on, and that really hurt the after hours market. This all happened after hours, including this big gap move that you see here. And that's an important move. Now, that's when futures are closed for about, an hour or so, or a while, depending on where you are. Taking a break and then came back in, and this gap had extended at that point. But you get the idea. I'm going to bring you back now to what we do here. These are the two charts that we look at. I'm just going to get rid of that circle or the ellipse so that we can keep our charts relatively clean here, getting back to the basics, simplicity in our charts. And what we have here is a 10-minute chart on the left-hand side, and we have a 1-minute chart on the right-hand side, and that's about it. The only indicator, if you want to call it that, you'll see on my charts today is this 20 EMA on the 1-minute chart. It doesn't matter what period you use. You could use a 10, a 15, a 20, or 50. I wouldn't go much higher than that for this purpose, but you can if you want. It's about relative deviation from the moving average, not things like crosses or retracements too and things, although we will look at that as well if that does happen to set up, okay? The only other screen we will look at is here. It's what I call the sisters grid. It's the four sisters. These are the 3 U.S. indices and the DAX in Germany for Europe. And you'll see they're very much doing the same thing this morning. These are 1-minute charts as well. The NASDAQ on the far left, that's the one we're trading today. And then the Dow to its right, and then the S&P, and then the DAX. And you can see markets are spiking. Here again this morning, looking very much like they did on the New York Open, although on a smaller scale. This looks big because we're zoomed into a 1-minute chart, but it's not that big. This blue line you see forming here, this little dash, is the London Open. It's where we just opened. And you'll notice here on the NASDAQ that today's London Open is essentially exactly the same level as yesterday's London Open, remarkably. After that massive 207, 210 point rally, we're back exactly where we started yesterday in London. And then here we have the London Open on the Dow, on the S&P, and on the DAX. And you can see doing very much the same thing. The reason we look at these charts together, by the way, is looking for synchronicity, congruency, possible divergence, and for clues as to where the markets might move from here. I'll bring you back to the main screen. We will spend most of our time here. And I've drawn some very basic support and resistance zones. There's no rocket science here. This is very, very simplistic stuff, as I said. But having now been doing this in the capital markets and the finance industry for into my 4th decade now, I've evolved into this kind of simplicity. And there's nothing wrong with using indicators and adding complexity. I don't judge anybody for doing so. I've done all of it. This is just where I've gotten to now, where I've kind of gotten back to, I should say, back to first principles. And there's a lot in the videos about why I do that and how you can too, and really simplify the way you think about trading the capital markets. All right, we have 4 minutes left on this initial candle of the London Open. You'll see the changing color background here as we'll move into this zone you see here from yesterday. It's a different color, just showing the three trading sessions: Asia, London, New York. You saw the explosion yesterday in New York, right? So now we're just starting off in London. We're back into that Asian range. That's the same range as I mentioned that we had yesterday in Asia and London, and the day before in Asia. Lately, the last few London Opens, I haven't actually taken any trades on the Open, and it's because there's been nothing to trade for me. It's been very range bound. These kind of wishy-washy, sluggish sessions. But what we have been able to do is to take trades later on in the session. Excuse me for one moment. Okay, I'm back. I just muted my mic there just to clear my throat early in the morning here. The air is so dry now in the morning because we're into the cooler months here in the New York zone. And so the heating is on already here. Well, the last few days have been very nice, 19, 20 degrees Celsius. It's been almost shorts and t-shirt weather here. But these early mornings can be a bit of a challenge on the throat. So now you'll see this turnaround. This is why I typically don't trade in the first 10-minute candle. We saw that strong white candle, white meaning up on my charts, and now already flipped to blue, right? With that topping wick, that upper wick, that rejected right at that support zone that I drew from yesterday, as a matter of fact. This comes back and the day before from Monday. And here we are on Wednesday. And prices are still rejecting at that area quite violently, as a matter of fact. And you'll see on the 1 minute chart here very clearly where we wicked up and quickly rejected, and prices driven back down again. So imagine all those traders, the day traders, the scalpers who jumped in on that impulse move right in the very beginning, thinking, okay, this is going to be another up day like it was yesterday, and then probably getting slammed, getting stopped out very quickly, depending on where they had their stop, if they're scalpers, inside of that 10-minute candle. And that's why 9 times out of 10 I will wait for that 10-minute candle to form and to close before even considering taking a trade. Your approach might be different. There are 1,000 ways to trade. There are 1,001 ways to scalp and day trade, and this is just one way to do it. This just happens to be the czar way, as somebody said in our Telegram group, and I kind of like that. It's kind of got a bit of a ring to it, I suppose you can say, the czar way. But this is just, there's no rocket science here, folks. I wish I could say this is something special that we're doing, and it's really not. Ultimately, as you'll hear me say over and over again, trading is a game inside of your mind. It's a head game. It's not a technical analysis game. You do have to understand price action, basic price action. You can learn that in weeks. You really refine it over years, though, and I have a certain feel for the market now from what I'm told that the newer traders don't, and that's just because I've been doing this and now into my 4th decade, 33 and a half years trading now, give or take. And you start to, your brain, the subconscious parts and unconscious parts of your brain start to pick up on things that you wouldn't if you weren't doing this for a very long time. But basic price action, you can learn it in weeks. once you have it, becomes 100% a mind game, a mental game, an emotional control game, a game of impulse control. And once you discover that, you gain a certain power over this thing, power to make money and to preserve capital. That preserving of capital being such an critical part of this equation. So again, still waiting for this 10-minute candle to finish, of course. Hopefully I've just given you a basic idea of what we do here. I normally form these support and resistance zones early before we come on the stream. Real basic stuff, again, as I mentioned. Just watching that candle now, really doing nothing, kind of a doji candle, an indecision candle. Whenever we see a gap move like that, those gaps are often filled, but it's not a hard and fast rule like a lot of people think. It's kind of a myth. This is really just where no trading took place. When the futures contracts were closed for a bit, they take a breather and the brokers and dealers reload and they come back on. It's just that the market wasn't able to express itself during that gap, of course, as earnings were coming out and notes were being made on those earnings last night. Last night for New York time, it's possibly midday or early morning for you, and depending on where you're from. So look at this candle now. Remember, it was very white, and then it became quite blue, and then indecision, and now in the last 5 seconds, pushing up white again. We'll see if we can actually break through this resistance zone, and then it might get interesting. New 10-minute candle has begun. Watching it very closely here. But not looking overly optimistic here in the early part. I mean, London has been very sluggish in terms of direction for at least a week and a half now. We started this YouTube channel and the live streams about 2 weeks ago, maybe 2.5 weeks ago. For the first few days, we did take trades on the London Open and on the New York Open here live on the stream, and then things became like this, like we're seeing here, where we stayed in these ranges and had to wait till later in the session for the range expansion and some really nice setups. At which point we came back on, or I came back on for some pop-up live streams and some recorded videos as well of those trades, sending them out to our new Telegram group too. That new Telegram group is less than 2 weeks old. It's only about a week old now, and I encourage you to join it. It's in the description, but it's Zerillion Trading, the Telegram group. We have now about 55 or 60 members, I believe. And there I'm able to share my setups and trading ideas before they happen for the most part. And the group's able to take advantage of them. And that's been a very profitable endeavor already. So I encourage you to join. On the YouTube, by the way, if you're enjoying these videos, please click subscribe and hit the bell notification so you can get notified of these live streams, but also all the new videos. I've been posting an average of 2 to 4 or 5 videos a day. So in 2 weeks now, we have over 70 videos posted on YouTube. And in order for you to see those being posted in real time, click that bell notification, click subscribe. We're happy to have you as part of the family. Just starting off here, but I think we're starting to get a little bit of a following now as people are beginning to see what we're doing here and what we're accomplishing with our new social media endeavor. And I'm new to social media. Twitter went from 0 to 200, and I'll say 230 followers in 2 weeks as well. It's kind of nice. We've had some really wonderful endorsement by some very big traders and well-known traders on Twitter. And that's really been a very nice thing. It's just a wonderful community. And I'm eternally grateful for that kind of support in terms of what we're doing. Members of our Telegram group have been liking and retweeting a lot of the tweets that I'm putting out, and that too is exceptionally helpful in getting the message out and helping to expand this family of like-minded individuals, all looking at the markets in a similar way, looking to extract profits in any way that makes sense, right? That's what we talk about here. Nobody needs to do things the way I do. It's just one way to look at the markets, just a little spin. There might be a nuance here of thinking or philosophy that appeals to you that you can take and apply to your own trading practice. And that's what I'm hoping to achieve here, not to have copycat traders. There's no reason you should be doing things exactly like I do. Our brains are all wired differently, and we have different psychology, and we think different things appeal to different people, and they work for us. You may choose to have 3 or 4 indicators on your charts. Nothing wrong with that. I've had up to 10 indicators at one time on my chart for years, and it worked for me. There's nothing wrong with that. I have nothing against indicators. If it works for your brain, if your brain likes it, and if you can gain some kind of a tactical or strategic perspective based on those indicators, then by all means use them and enjoy them. Here we go again, guys. We're back into this ranging action. You'll see this next candle now is really an inside candle to the first one. And that first one, for me, sets the range. I'll just explain that very quickly now if you're new here. That first 10-minute candle, which I usually wait for, will set the range now for the open. So now we're inside of that opening range, as you can see here. But for me, this range is actually bigger, and that's because of the micro support here in the pre-market, in the pre-London. Right? So during the Asian range, during the Asian session, this would be my actual range, because in order to break out of that first candle, we'll be slamming directly into this, and so that has to count for me, right? I might look for something down here, depending on what it looks like on the 1-minute chart. That's a few points there. That's 35 points. Nothing wrong with that. You take a nice 10 to 25 or 35 points out of this. That can be your day sometimes, right? Depending on your position size. And then, of course, the range above. I will explain to you that the reason I have these arrows here, these are not predictions as to where price is going to go. Those are just where I believe price action will trade freely if, in fact, we get into those ranges, given clean traffic to the left. Very clean traffic up here. This gap, of course, in clean traffic here, and then cleanish traffic down here. You see that? And you see it again here, and you see it again here. You can see how prices could drop very quickly and very hard here if we break into this area. And something similar is true to the upside. So that's what those arrows are for, not predictions. I'm quite willing and happy to trade from the long side, and I'm quite willing and happy to trade from the short side, depending on what the market's telling me at any given point in time. And that's the essence of day trading and scalping. I wouldn't be as nimble with my position trades, right? You know, I'm primarily a swing and position trader, and we're going to do a lot of material, a lot more work on that here in the channel to explain how and why we do that as well. Price is trying now to break out of this zone. We'll see if they can get there. Maybe we'll have a long opportunity here. Let's see. Otherwise, we will just close the stream down and move into our day for looking for other opportunities. But we'll see what we can do. The 3.5 minutes left here in this candle. Take you back to the sisters grid in the meantime here, and I'll reset this. We'll see very messy. Very messy. I just hit the wrong button there. Messy sisters charts here. These 1-minute charts are just whipping around all over the place. See that? Kind of like a dog's breakfast this morning. We'll often have clean movement here on these 1-minute charts, and that gives us some direction, but this is just a mess. You see that? And so I'm not garnering a ton of information from this, but now it looks like we're getting a push up. We'll see what we can do. That yellow line, by the way, on the NASDAQ chart, the far left, is yesterday's New York Open. So we're kind of hovering around yesterday's London Open and yesterday's New York Open. So you see that very tight range that we're in, despite this massive move that we had in New York during the New York session. So it's been a very interesting 24 hours, to say the least. Trying to push up here, but rejecting again at that zone, and hence the reason I draw those zones ahead of time to really garner some parameters in perspective. Oops, I'm going to bring you back in the wrong screen there. You see pushing up there into that zone that I mentioned. Gotta remember to flip back those screens so you can see what I'm talking about. It's my bad. Watching patiently. Good morning, Let's Footsie. Hey Jay, how are you? I'm not in any positions. No trades. Again, we're range bound here on the open. As I was mentioning, you might have been a little bit late to the start here, where I was explaining that we're still in this trading range here, or this opening range, as indicated by this red marker, if you want to call it that. The opening candle, of course, being this 10-minute candle that you see here, but the expanded range needs to be taken into consideration for me, given the support zone, the micro support here that occurred in the Asian session. There's no use using the first candle as an opening range and then slamming right into this support zone. That doesn't give us much of a move at all. That would just be a few points, but very, very messy, like 8 or 9 points at the extreme. But we would still need a closing trigger candle, so that would take part of those 9 points if that meant. Positional trades. Yes, I'm in several that I'll talk about on a different stream where we get into how and why I take position trades, but mostly in cash, to be quite frank, on the position side. And that's because I believe that this market is not ready to move into its next bullish move, pardon me. And there's a couple of videos that I posted on the weekend as well about where I think we sit in this overall environment. And I forget the names of them now, but you can see them the last couple of days. They'll be marked differently than the typical scalping videos that I do. One is a bear market in perspective is one of them. And one other one's called Fear, I think. And take a look at that, and talking about the long-term perspective on the NASDAQ. The very interesting position we're in right now. All right, here we go. We're getting a bit of a push up now. I would need to see a bottom wick before taking this. This might run away on us. Run on me, I should say. Nothing wrong with taking a position here for an impulse trade. I won't be doing it because I didn't see that that lower wick form, which may still form on this candle if it flips down blue again. If you get the idea. So I'm not taking anything yet, but that is a legitimate entry for scalpers, right there, depending on your method and modality. Still have to get used to looking at the chat window too, again, being brand new to streaming into YouTube, into social media for that matter. But I appreciate Jay being here. Let's Play Footsie. I love that handle. I think it's awesome. It really does speak to what you do too, doesn't it, Jay? So that candle pulling back now. Now we might get that bottom wick that I mentioned that I typically do look for before entering. Again, we're looking for the most certain move, at least I am here. Looking for the most certain move, not every move, not the whole move, but the one that's most certain. And again, there's nothing even remotely certain in trading and scalping in particular. But I want that kind of high win rate if I can, and even high break-even rate. I have no problem taking back-to-back break-evens 4, 5, 6 times in a row, and small losses for that matter, just in order to get that most certain profit. There's that pullback, that lower wick that I was talking about. That'll be a wick now. If that even comes back to being a white candle, if it does, that'll be a bottom wick. And that's exactly what I was talking about, what I look for. And if we don't get it, we often will eventually get it. And why I don't just jump into a trade like that, because we happen to break into the next zone. I did a little video about that yesterday. It was called, or the day before, I'm not sure now, but it was called How to Avoid Being Screwed by a Breakout. Encourage you to look at that. It's about 5 minutes long, I think. But just about how to avoid this thing here, this fake out, fake breakout. And this thing might still absolutely close the zone, but we're not there yet. Market's telling us that we're having a difficult time getting in, staying into that zone, because fresh selling pressure is coming in. Obviously, I'm talking in very simplistic terms, and I like to do that first principle thinking in terms of price action. Fresh selling pressure, of course, rejecting this idea of moving higher for now, and that can change in a heartbeat, as we might see on these next few candles here. watching that 1 minute chart too, if we see an orderly pullback to and beyond the 20 EMA, then a resumption of this strength, I may in fact take a position. But we're not seeing that. This is a very wishy-washy set of movement candles here on the 1 minute. And that's not particularly appealing to me. When I can see a nice impulse move on the 1 minute and then 4, 5, 6 nice clean blue candles pulling back in a cascading form, then I get interested. Right? It's a more optimal or optimized structure. It's a better structure from a candle engineering standpoint, if that makes any sense. It will if you as we expand our content here and I explain some of those things in more detail. I'd like to get a push up now. We'll see. But still not ready for me to take a position. This is now a little bit extended on the 10 minute. Right? See that? Moving up. Without that stronger pullback and foundation here, I'm not really interested in taking a trade. But nothing wrong with trying your luck here, the flipping the coin on a break above this candle. This candle breaks above itself. This could be a nice momentum push. Just not feeling it here on the open. Very indecisive action. Take you back to the sisters grid, the 4 indices, and you'll see here this is a dog's breakfast, right? There's no conviction behind these moves yet. This could happen now as we break above here, 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 and here on the DAX. This is the DAX on the far right-hand side. But this is messy. There we go. So this is something that I would take under different circumstances. Let me get this trade marker out here if I can. Right about there. Entering here for a nice little push up. Nothing wrong with that trade at all. You can go for a nice round number there, like a 20 point move. Probably even still time for that. But for me, just not enough conviction, and so I'm waiting for that more certain move. The entry would be there above that wick, or in this case above itself, because it had to flip first. You get the idea. Stop below the wick, and waiting for that. But again, not enough conviction for me. This is very, very sluggish movement. Oops, I had the wrong screen on here. That's what I'm referring to. Again, would be the entry there. Stop below that wick, but again, not something for me. You see this 1 minute here, just languishing and lagging, and can't decide if it wants to be white or blue today. To put it in those terms, kind of a simple way to look at it. So again, this is not a trade for me. I'm just putting a marker in for ideas of what some scalpers might do and traders might do. I'll take this out so people don't get confused and think that I'm in a trade, but you get the idea there. So unless this picks up on the next candle in 3 minutes, I'll probably call an end to this stream and wait for something better to set up later on. Either I'll do a pop-up live or I'll probably send the idea to the Telegram group. That's been the feedback, by the way, is to send the ideas to the Telegram group and then record the trade to post so that followers can learn from the setup, the mindset behind it, and then the rationale for managing the trade throughout. I think that's a good idea. We're still refining how we do things here, given that we're brand new at this, and I'm going to defer to the wishes of the group on our Telegram group on that, and our Twitter family, and so on. Please join us on Twitter as well. At Twitter, it's at Zerillion Trades. At Zerillion Trades on Twitter. It's in the description too, the link. And then of course we have 2 Telegram channels. Both of them are free. Everything's free that we do here. We don't charge for anything. We have a main chat group that everybody can share ideas in. Another one that's just outbound only, where I send a lot of resources, especially on the weekend. Interesting statistics, macro stuff, position trading, swing trading, and things of that nature as well. So I encourage you to join both. Zerillion Trading and then Zerillion Trading Chat, and those 2 I believe are in the description. I will check on that afterwards to make sure. You can see this candle now rejecting again, right? Turning blue and really the sense that I had that I wouldn't want to take that. It's just not enough momentum for me, not enough impetus. There's no energy or caffeine behind these moves this morning, like we did see in New York yesterday. And how I mentioned on New York that if I wasn't doing the stream and engaging you in the stream, I'd very likely be in that opening move, which I rarely do, unless I see something powerful happening leading into the New York Open. In this case, we're London Open, sluggish, wishy-washy, unconvincing, and a lack of conviction. On that note, guys, with this candle closing doji now in the next minute and a half, I'm going to end the stream. But again, please join us on the Telegram group so you can see what we're doing here, usually in advance, and then be able to take part in some of these trades with us. We've been very profitable. As a matter of fact, very, very fortunate to be profitable every day and every session, London and New York, since we started doing this over 2.5 to nearly 3 weeks ago now on YouTube. And that, I promise you, that will not always be the case. We will have losing days, maybe even losing weeks. Less likely, but maybe losing weeks. And so I just want to make sure that we understand that we've been very fortunate lately, despite these challenging markets, and they have been challenging for scalpers and day traders, given the rapid swings and vacillations between up and down. Again, simplistic terms, but that's the way this works. Thanks again for joining us, guys. I wish you a very happy hump day. Hope to see you in New York if you're around for that. Otherwise, we'll see you again in London tomorrow or throughout the day as trades set up and we take advantage of them. Thanks for your time. Have an amazing day, and we will talk soon. Take care, guys.